Traders, and welcome to another weekend's market forecast video. Hopefully you had a great weekend so far, and here we go with another weekly forecast. As we usually start with the dollar index. Before we get started, I would like to remind everyone which is new here to remember to subscribe and turn on your notifications so whenever we post a new video you receive a notification. At the same time, we have all our social links down in the description, including our Telegram channel for posts, notifications, and any updates. And of course, the most important thing that we provide is our membership service that we cover analysis in full detail, including 4 weekly live sessions Monday to Thursday for our premium plan. The link is in the description as well for those who are interested to check it out. And any questions, you can email us at support@roiforecast.com. So let's start with the dollar index. As we have been explaining, we expected the move to the downside to get started. This was the initial stage of the move to the downside, and then we have been expecting some sort of consolidation and correction before we head lower again. And we are entering this week at another choppy period of the dollar index, and soon, maybe from the new month and next week, we will see the next move to the downside. But in the beginning of the week, at least, we can see some more consolidation within this range to be taking place before the market can turn to the downside later on. So overall, we are still bearish in the dollar index. For the dollar yen, as we have been explaining, we expected the move to the downside to get started. We have been explaining this pair since this choppiness up here, that it was at the last stages of its move to the upside, and we got started with this move to the downside, which is more than 500 pips. We can see some more consolidation within the weekend soon. Sometime within the later parts of the week or next week, another move to the downside ideally should take place. So for the time being, some more consolidation here. We can even go a little bit higher, but the next move will still be to the downside for the dollar yen. And at this stage, as we have been explaining, the market is turning to the downside, and you shouldn't be looking for any buy setups at this point. For the euro dollar, of course, we have broke these highs from the 4th of June as it was expected up here. And then we have been expecting some sort of consolidation to get started. And this is what we got last week. So overall, buyers bought this one from here. We explained to our members back from April about this move to the upside. Then we have explained again, even here free on YouTube, about this consolidation for the next move to the upside over here. And now we are expecting within this week some more consolidation, maybe some up and down to get underway still. But the next move will still be to the upside sometime from the end of the week or the beginning of next week. So this week, at least for the first 2-3 days of the week, we are expecting some more choppiness in the major pairs in Forex and before the next move can take place. For the pound dollar, similarly to the euro dollar, we have got this move to the upside from this consolidation down here. We have been explaining this even in our free YouTube weekly Forex forecast videos. Now the market is doing a pullback. Of course, this pullback doesn't have to extend much. It can just do this and then turn to the upside again. We still have not reached the target area for the pound dollar, which our members knew even from these lows down here in April what was the target for the pound dollar, and this is where we are heading. And it's somewhere above 131. This is the area if you want to know. But of course, if you have been a member, you knew all along from these lows from 124 that this was a buying area towards 131. And we also have the recordings. Even if you want to join now our membership, you will unlock all of our membership content. If you go with a premium plan, you get also the live session recordings, and you will see what we have been saying in the 3rd week of April about the majors as well. with of course also evidence from the market order flow, something unique that not many people can offer to you in any service. So anyway, what we expect for the pound over here is consolidation this week before the next move the following week, and the bias is still to the upside for the pound. For the pound yen, we have reached almost our target area for this move to the downside. We have been explaining this in our live sessions to the members as well. The cycle that we started at least from May has ended, and now we are doing a pullback. There is also a bigger chance that a bigger cycle has ended in most of the yen pairs as well. So very soon from here, we will not be surprised in case the market does something like that and then moves to the downside again. So for this time, we are not going to be looking for buy setups for the pound yen at this point. And we would like to see more structure and evidence what it wants to do. It's still at the beginning stages, and this is a high from 11th of July that still needs definition before we can forecast the next bigger move ahead. For the time being, there is also a small possibility that the market can do one more high if it wants to before it falls. But regardless of the case, we are not looking for any trades in this pair at this stage. For the EURUSD, as we have been explaining from these lows, the market needed to give us some bounce, and this is what we got. We have another Fibonacci extension area over here, which we can expect to see the next move to the downside, and ideally we need to break below the lows from 26th of June. This is what we can see, and overall this market is still trading lower within the cycle from 5th of March over here. This is the pivot of the market, and we are trading lower in this cycle, which we are expecting new lows ideally, but we need to see how the price will react from this area and what it wants to do next, because there is also another possibility in case this one does a small pullback and another high, then it can even do more bouncing before the next move lower. But if someone is looking for an extreme area for an entry, this is your area that you can attempt to sell. And above 163,500, the cycle will switch for a bigger correction. Below 163,200, 300 over here, we can see the market making new lows below 160. For gold, we have made so many videos about gold, about this consolidation stage down here for the next move to new all-time highs, which we have got that. Now we are getting a corrective pullback before the next move higher, because we still have a target to reach for gold. But it doesn't matter now, because the move was from here to here. It's more than enough for any trader to book profits. So now if anyone was long from this area, this position is risk-free, so you don't really care what will happen next to gold. But we overall see more upside in general. This week we will get some sort of a bounce. We might get another move lower. I'm not expecting much here. It can also be a flat move, something like this. And then the week after, we should get another move to the upside in gold, which should exceed the 2,500 area ideally. This is what we can see as the most high probability scenario in gold. By all means, we are not even interested in looking for any sells. The bigger move is still to the upside for this point in gold. For oil, as we have been expecting, and we explained even from beforehand about this Fibonacci extension area, we had a high on the 5th of July, and now we reacted lower. We can see more downside is expected in oil, at least a small bounce, another low is going to take place from here, and then we will see what happens next. But for us, we have been saying for a long time that the bigger moves in oil are to the downside and not to the upside, despite what you might know or what you are reading in the news. The market structure is telling us something different. There is something deeper going on with oil. If you want to know more details about it, we can only disclose that to our members for our service, because we have that if you are a serious trader and you want to get educated better. For here, for YouTube, we'll just say that the bigger move is to the downside. Ideally, we are projecting in the weekly time frame to break below the lows from 4th of June and even from the ones from the end of December, few months before. We are expecting new lows in oil. Of course, it's not going to go in a straight line, but if you know which areas we have been looking for, it was this one, then it was this one. You know the extreme areas of reactions, and if you are a trader of oil, you know how to manage your risk and trades in general. So from here, we can overall see more downside. We have a weekly target to the downside. Weekly, we mean time frame. We don't mean in 1 week. The market will go there. We have different time frames, as you know, daily, weekly, monthly, 4-hour, and so on. So in the weekly cycle, oil is projected to see new lows. If you want to know the bigger picture and what we see ahead, feel free to check us out with the link in the description. Become a premium member and you will get everything. Plus, you will be able to ask us live questions in our live sessions, and we will give you the answer straight away. So for oil, we are bearish and more downside is to be expected in the near future. Now for Bitcoin, as we have been explaining last weekend, we expected the move to the upside to continue. We explained a lot about these lows from 5th of July. And we also explained how the market was consolidating since 14th of March. And from here, we expected buyers to regain control and start the next move to the upside. And this is what we can observe until today. And we expect Bitcoin to hit new all-time highs soon. So for us, we are not daily traders in this asset, Bitcoin or any crypto. We are only looking for extreme areas that we can buy in the spot market, and we are not gambling with leverage in crypto. There's a very big reason for that. And what we can, what we can see is more upside. So even with another high, then a consolidation and another high to take place. And from there, we should see obviously some pullbacks in between, not very big ones, but we can see overall the market hitting above 75K. If you want to know the bigger, as I said, monthly, weekly time frame targets of any market, as I said before, we can explain that only in our member-only area. The link is in the description if you are curious and if you are a serious trader or investor. We do not accept newbies or anybody that doesn't have the capital to trade or invest. We only want to get people that they understand what they are doing and that they would benefit from our professional analysis. Now for SPX, S&P 500 Cash Index, we have got a reaction from this Fibonacci extension area, which we do not see yet as a bigger pullback. We can still see another high in this index specifically before we get any pullbacks later on. However, we have to be mindful that we might get a bounce, another move to the downside before we go higher. So this is the only alternative scenario we can see, but still overall the bigger move should be to the upside in this index, and we are not interested in any sell setups at all. Even we are not interested in any buy setups at all at this stage, because we have been buying this one from here and from here, and we do not like to chase a market that is getting more extended. We should rather wait for some sort of a bigger pullback like this if we are looking to buy. But if you are looking for any shorter term trades within this week, the market might provide to you a chance at least for a reaction. But for us, this one now is becoming risky to chase higher, and we would rather stay on the sidelines. And finishing off our weekly forecast video with the 3Qs and GDX from our ETF section. The 3Qs has seen a pullback like the SPX last week, as you can see. This pullback can extend a little bit more, so it can even do something like this before it turns to the upside, but we are expecting the next bigger move to still be to the upside for another high before we see another reaction. Alternatively, we can get a bigger bounce, then another reaction, and then another move to the upside next. So something like this cannot be denied. It's still a possibility that can play out in the market, but what we are trying to say is that we do not see yet any bigger move to the downside, and the market ideally should remain supported for the time being. Of course, if you want to get the regular updates, we cover that for our members. If you are interested, the link is in the description to join us. And from the GDX, the gold miners ETF, we had new highs above this one as we expected, and the market reached the 39 area, provides us with a pullback, and then we can still see more upside above the 40 area. Of course, we can get an accumulation right here, and then we should turn to the upside as well, and the bigger move is still to the upside for GDX. So that's it for this weekend's market forecast, guys. We are entering the last week for the end of the month. So many of the currency pairs in majors can get a little bit choppy, at least Monday to Wednesday. So would like you to know that as well. And we will also come with another update video probably midweek, like we did on Thursday. So with that note, enjoy the rest of your weekend, and we'll see you in the next video. And do not forget to leave us a like, because this pushes our video to more traders so they can all benefit from our analysis. And of course, if you want to get detailed analysis and stay ahead of the market and get our personal trade recommendations with very good risk to reward and big moves ahead, check the link in the description. And if you have any questions, email us at support@roiforecast.com, and we'll get back to you within the day. So thank you guys for watching, and we'll see you in the next video. Take care.